Hello, traders. It's 8:03 a.m. Chicago time on Thursday, the 20th of August, 2020. I'm having a problem with my Bluetooth headset, the one that runs into my computer. So I'm using just my workout headset. I'd like some feedback on the audio. It's not going to be as is normal. This headset's not intended for broadcasting. Hopefully, you can hear me. I want to say thank you for joining me today. This is episode number 1823. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the bonds are up 27 ticks. The bonds are trading at 179 and 7 ticks. The euro bond is up 53 cents, 53 ticks. 10 years are up 6.5 ticks, and the dollar taking a lift here, up 11.5 cents, trading at 92.99.5. So that's where we stand this morning. That's where we stand this morning in terms of where the market is. Uh, the overall picture is we have dropped. Okay, we did drop. Yeah, I know the sound is not all that great, but it's hopefully it's okay. Some technical issues this morning. So overall, the ES has dropped below that key area overnight to the 3350, which was a triple bottom. I'll go over that in a minute. Um, if it's buffering, I don't see any issues from my side. Oh, I see. Yes, it is buffering. 1 second. There we go. I switched the feed to the backup server on YouTube. I figured that out the other day. Hopefully this will work a little bit better. Um, it may be a rough one today. It's looking like a rough one today. The Periscope link is on my Twitter feed. It's at twitter.com/futurestrader71. You'll find the Periscope link. Doesn't seem like there are any issues with Periscope this morning. So far I have a mic issue and a YouTube issue at the same time. Anyway, so as I said, allocation is to safety this morning, although gold has taken a bit of a hit. Again, the dollar's higher, gold is lower. Gold is the weakest of the futures that I watched. Gold is down 1.74%. It's down $34.20, trading at 1936, and has come off a fair amount. The S&P is off 16 and a quarter points, and the Russell's off 12.9 points, and so on and so forth. What's on deck today in terms of releases? This morning, I got a bunch of releases out of Europe. We did have initial claims at 7:30 Central, 8:30 Eastern. Came in at 1106, which was higher than 890,000 expected. So we got 1.106 million versus 890,000. Philly Fed also came out. They came in weaker at 17.2 versus 20, and that pretty much wraps us up. At 1 o'clock, we get Fed's daily, and then this evening, Great Britain gets GfK consumer confidence at about 7:01 p.m., expecting negative 24, and the inflation rate out of Japan. We're pretty much wrapping up the week. Here. So let's take a look at what was expected yesterday versus what we got. Yesterday, the primary expectation is a dip. I was looking for the market to revert back into the prior day's range, a little deeper into the prior day's range, potentially test the overnight low, and then turn around and push higher. I was looking for the market to make its way up to 3,400. The secondary is a push higher that falls back into the range, and then we get just a slow grind up to 96 or so, and then 3,400. The third scenario, which I drew in as a low probability, is is the one that kind of worked out. It's a test of the overnight high, push through, and then fall back through, and then make its way down through the 33.85 and start to make its way through to the downside. Some of the targets to the downside, specifically the 33.75 area before the bounce. Here's what actually happened yesterday. We started the day in a completely orderly open auction in range, and so we have a nice opening swing high, opening swing low, and then we pushed to 95.75. Now remember, I wasn't here for this yesterday. I left right after the trader bite to move my daughter into her university dormitory. She's a freshman here. School starts next week, so I was gone pretty much all day. I checked out the action in the evening when I came back, and noted that the 3350, the key 3350 level, had been breached, which I talked about earlier in the week, that we're expecting that to be taken out at some point this week, and that point was last night. So we pushed up to 33.95.75, and then we had an impulse down. The initial balance was very tight. The beginning trade, the trade in the day, notice, we didn't breach the IB until about 10 or so, and if you look at this, this is a 4-tick Renko, and we only have maybe 20 bars for the first hour and a half, which is pretty slow. Terribly tight range. We finally breached the IB to the upside, and then we breach it to the downside for a neutral day. We finished yesterday in a neutral extreme stance. Although the point of control stayed up high, the overall day type is neutral extreme. So that's with some pretty interesting features yesterday. It did pull back to the mid right here. The mid is hiding behind the prior close, pulled back to the mid. Nice little consolidation here with multiple lows, multiple week lows at 78.25. Then we get this nice little zipper here, and then it kind of pulls back to the mid and rolls over. And then once it breaches through, it comes back to these multiple week lows right here for another opportunity to continue. Of course, it is pretty hard to believe that we would get a continuation to the sell side. And yesterday, it did a good job of getting an impulse continuation in with the mid holding for once. We did not have a V bottom like the day before. This is the normal action for the S&P. Lately, we get the move, and then it just grinds its way up to where it started yesterday. It didn't do that. A little bit different. The profile yesterday shows that there was active discovery through a wide range, and it's discoveries to the downside. The profile yesterday shows that there was no consensus on price, really. The value area of yesterday is questionable. It is inside. Yesterday's value area encompasses the prior day's value area. So although we moved the point of control higher, from about 33.87 or so to where it is today at 33.91.50, something like that. The overall value area stayed the same. This is kind of like what we would look for in a rounded top reversal. We still have the 3,400 just above us, that we didn't test yet, and we are trading down here. So today, I'm looking to see if it manages to get above 33.80 or so. 33.80 or so. If it does not, then we're looking for continuation down. The next level down I have is 33.35. The next big area, that's the next big area below, and that's where we stand. Yesterday had the delta move with price very nicely, and it looked like it was well subscribed in terms of the sell-off. Let me just pull up the volume. As you see, there is 1.16 million in the RTH. That's pretty decent volume there. Pretty decent volume for the session. Let's take a look at what has happened in the overnight session. So I'm going to pull you back to over here, this part of the chart. So we sold off pretty strong on this day, came into, this was in the overnight session, came into 33.50, and we tapped it 3 times. These are 30-minute bars. These are 30-minute bars. So you have 3 TPOs. If you're a market profiler, you have 3 TPOs at the low here that could not be broken, leaving us with a lot of volume. There's a lot of volume down here at the low, and leaving us with a triple bottom or weak low. And that's why I was saying we're looking for this to get tested in the next week or so. Historically speaking, approximately 88%, and this is an old study, so don't lean on it. 88% of the weak highs or lows are remedied within a week of them being put in. And so, I was looking for this to be taken out sometime this week, and we did. So here we are. We got into it last night. We stopped about 5 or 6 ticks ahead. We took a little bounce, and we finally flushed through. And then consolidated here, and we're still holding steady. The next area up to monitor is the 65 area, okay, which was yesterday's low, the RTH low of the day before, and it was the extended hours low the day before that. And so my expectation is this area is likely to give us a little bit of resistance on the first touch from below, which it did right here. A nice little rotation from, what is it, 64 something. What is this high? 64.50, all the way down to the 49 quarter. Put in a double bottom here. Put in a weak low, locally weak low, has migrated all the way up, and it's really clean and clear in terms of once it clears the 65, it's pretty good all the way up to about 74-ish, 75, this area right here. The mid of the entire move is at the 70, and it's kind of holding steady at the low end of the range. Notice that the value area is very well distributed here. We have a Gaussian distribution with the point of control at the mid, and a very, very clean and clear value area in the overnight session. Pretty good volume, 293,000 contracts traded, and so this is likely to be an interesting day. We have basically established value lower, and so if the market does not squeeze higher, or if it does squeeze higher, it would have to push through the 70, 74 area to bring us back into the rising RTH value, this value area that keeps shifting up, and until yesterday, where we finally shifted the value area down. So you could see that the value area created somewhat of a megaphone effect, as opposed to just continuously moving up like you see back here. So we could see there's a pretty decent slant all the way through, and it's starting to kind of widen out and rotate over. Okay, and so that's where that stands. Looking at today, though, I'm expecting it to really take another run at this low, and we'll see how that goes. I don't have too much faith in on the short side, and so I'm going to be cautious doing that. Let's take a look at the order flow here a second. Overnight, you could see the liquidity in that 70 area that I talked about. Remember, the key areas I talked about above are 70 right here, 70, 75, right? Those are the key areas above, and we're going to monitor those for a reaction on the push higher. The market is moving away from the point of control, moving away from the mid and the VWAP, which were overlapping each other, in the overnight session. In the 58 to 59 area, we're moving away from that area now, and we're going to see if it has a continuation. Overall, it looks like a selling day, but again, I don't have very much faith in selling in this product just yet. This may be the first or the beginning of the market rolling over and correcting some of the structures below. Let's get into what's expected for today. There we go. So, what is expected for today? By the way, looking at the FANG stocks yesterday, it looked like they just could not recover from the sell-off the day before. We could see that the FANGman stocks could not hold on the sell side, with Nvidia being the weakest. But yesterday they did continue lower, and in my opinion, it just allows the market to breathe to the downside. Currently, we're trading right here. I'm expecting we're going to be opening in a gap down. We'll have an actual external gap to yesterday's low. Yesterday's low is at 65.50. We're currently trading at 53, about 12 points below it. And the overnight inventory is almost 100% short. The expectation this morning is an open that tests this double bottom low, consolidates, impulses up, and then works its way back to the overnight point of control. Expect it to hold steady here at the 58-59 area and grind its way up into yesterday's range for a push into the 70 area. There's liquidity in the 70 areas I talked about, so expecting constant consolidation here, and then eventually 74 before it corrects. So I'm looking for responsive buying into yesterday's range. That's what I'm looking for as a key trade idea and the expected natural pattern for today. The secondary is an overall balancing of the overnight inventory with responsive buying, pushing into the overnight point of control and squeezing up into the 65 area, consolidating here, impulse down, come back to the open, and then start to migrate lower to test the overnight low for the overnight stat, and the pushes through into the 43, 42 area, and then looking for it to poke through with a bounce. These are the two main ideas. So how do we trade that? It's like, dude, you said it's going to go up and then sell off, or it's going to go down and rally. Like, you've got all your bases covered. That's true. But the idea here is to understand what are the key areas that it's likely to play with. So I want to chart those out. Don't pay attention to the pattern that I'm drawing. This is just a visualization exercise that I do every day. The key areas to watch above are the 65.50 area, the 70 area. This is important. 75. Above the 75, it's free and clear to come back into balance and push all the way up into the 85 and 90 areas. So these are the key areas I'm looking for reactions. Okay. Down below, I'm looking for the 50 for a reaction. If no reaction occurs at the 50, then expecting the overnight low to be taken out, this 44.75 is likely to go. So this next area would be 43. And then beyond there, I don't have very much all the way down to the 27. There is a level here at 35.50. 35.50. But those are the key areas I'm looking for reactions at, and that's what I'm drawing on. I'm drawing these squiggles are based on the reaction areas that I'm posting right here. Okay? Good luck today, and I'll catch you tomorrow. Take care.